You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, May 7. I'd like to share some thoughts about stock investors. Imagine a stock market running so hot that its trading systems have to, automatically hit the emergency brakes. Like not once, but 7 times in just 5 months.
Yeah, that's wild. Today we're doing a deep dive into our sources on this historic KOSPI rally. We're really unpacking the massive wave of foreign cash driving it. And
The rather alarming warning signs flashing underneath, right?
Yeah.
Especially in domestic credit.
Exactly. I mean, to understand the sheer scale of this, you really have to look at the breakout. The KOSPI hit 7,384.56. We're talking about a market cap of over 6,058 trillion won.
Which is what, roughly 4.3 trillion US dollars?
Yeah, right around there. And this momentum just keeps triggering what's called a sidecar. For anyone trading from outside Korea, a sidecar is basically a program buying halt. It kicks in when futures jump 5% for a full minute, just to, cool things down.
7 cooling off halts since January is just wild. And looking at the data, the primary fuel for this fire is foreign capital, right?
Well, absolutely.
Because foreign ownership is at a 6-year high, like almost 39%. Is this purely because of the new Omnibus account rules? Because I remember it used to be a complete bureaucratic nightmare for a foreign retail trader to even get into the Korean market.
Precisely. It was a total nightmare. I mean, before you had to actually open local Korean brokerage accounts. But now
they can just use the Omnibus accounts, right?
Right. Omnibus accounts mean foreign retail traders can just click buy on their global platforms, and their liquidity instantly hits the KOSPI. Like, the friction is just completely gone.
Wow.
And what's really crucial for you to watch here is that this isn't exclusively a top-heavy tech phenomenon. I mean, yes, tech leads, but the KOSPI 200 heavy industries index is also up like over 26%. So the breadth of the rally is really widening.
The breadth might be widening, but the heavyweights are still pulling the most gravity. I mean, foreigners just poured 3.13 trillion won into the market. That's 2.2 billion US dollars.
Exactly. And that cash is heavily targeting the giants.
Yeah.
Like Samsung Electronics. For those tracking the tickers, that's KRX 0005930. They just surged into the trillion-dollar market cap club.
Yeah, and SK Hynix, ticker KRX 0000660, smashed right through its price ceilings, crossing 1,601,001. That's about 1,140 US dollars.
Right, and Kyobo Securities just raised Samsung's target price to 330,000 won, so roughly $235. They're projecting second quarter revenue of 158 trillion won.
Wait, 158 trillion won? That's about 113 billion US dollars. Wait, a 42% upside forecast for a stock that already makes up like a quarter of the entire index?
Yeah, it's massive.
That sounds dangerously like a bubble. Is this just typical memory chip hype, or are we looking at a standard cyclical recovery?
Well, the sources suggest it's actually structural. We are seeing incredibly strict AI memory supply constraints globally right now.
Oh, because of the high bandwidth memory demand.
Exactly. If you look at Samsung's first quarter DRAM operating margin, it hit an abnormal 78%. High bandwidth memory is so incredibly tight right now that these companies are essentially just dictating their own prices.
That's fascinating. But here's the crazy part. While foreign investors are pouring billions into top-tier tech, the foundation of the domestic market is actually cracking.
Yeah, the indicators are definitely flashing red there.
Right. I'm looking at the Buffett Indicator, which compares total market cap to GDP. It just hit 256% for Korea, which actually surpasses the U.S. And even weirder, Korea's volatility index, the KOSPI, rose while the market was rallying.
And that is a massive technical divergence, because normally when markets go up, volatility drops, because fear is low.
Right. They usually move in opposite directions.
Exactly. So rising together signals underlying friction. And you're right, the domestic credit foundation is showing real stress right now. I mean, just look at the JR Global REIT default.
Right. Amidst all this AI money printing euphoria, a major real estate investment trust defaults. The analysts call what happened here credit rating shopping. How does that actually work in practice?
So basically, the actual financial math said this real estate trust was a risky BBB grade, but rating agencies gave them an A anyway.
Wait, really? How did they justify that jump?
Well, because they heavily weighted qualitative factors, things like having good tenants with durable leases, so they graded them on their perceived reputation, not their actual financial metrics. And when short-term liquidity dried up, well, that reputation couldn't pay the bills.
Wow. So if you're an active trader, you're navigating this incredible AI boom at the top, supported by foreign cash, but it's built over a really fragile domestic real estate market.
It's a precarious balancing act for sure.
Plus, retail leverage, what they locally call BIP2, or debt-driven investing, is nearing a peak. And historically, that happens right before a pullback.
Exactly. Add in a late May portfolio rebalancing by the National Pension Service, which, by the way, manages 1,700 trillion won, or 1.2 trillion US dollars.
That's a massive amount of capital moving around.
It is. And pair that with the upcoming June 3 local elections, and you have a recipe for wild swings. So the question for you to mull over is this. When a market is sandwiched between global tech momentum and local credit realities, does the eventual shock come from foreign liquidity drying up, or a crack in the local foundation?
That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan A. Ferre award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.